All right, guys, today what I want to talk about is a very simple strategy yet powerful. I want to talk about the volume profile. Now, the volume profile is an indicator, and I believe you might need to pay to use that indicator. At this point, we should be very serious about trading, and so it should not be big of a deal to pay TradingView to have access to this indicator. I'm gonna put things in full screen here, okay, so it can be clear. And I have an NQ on chart on the hourly time frame, and I've already added the volume profile. What you can do is look at indicators, type volume profile, all right, and you click that volume profile session volume HD. You don't need to use the volume HD. You can use the normal one as well. It doesn't matter. I like to use the volume HD because I have I think a 2K and a 2K monitor. So might as well use the HD to have a better information here. What it is basically it's going to give you the volume in context of the price, okay, as opposed of having the volume in context of time. Now here, in context of price, what it means is we're giving the volume that's been taken, the amount of trade taken at a specific level, okay, and we really like the volume, normal volume, okay. Here we have a spike of volume, meaning this area here, a lot of trade has been taken at this level. Okay, the one thing I want to point our eyes to is the volume point of control. So this line in the middle, what it is, basically it is the highest point in a session, okay. And I want to point out that each of the squares is one trading day, one session. Now I'm on the futures market. Futures market will open at like 6 p.m. EST and close the next day at 4 p.m. Well, at 6 p.m. At 4 p.m. Yeah, the next day. All right. And so this VPOC or volume profile, volume point of control, will give you the highest point, the highest level price that has been where the most trades has been taken. Okay. And what's pretty cool about it is that when you use it with the most recent data, so I will see this guy the previous day. What these indicators can show you is that on Friday we had that level here, okay, and on Thursday we had a level that basically we can round it up at either 15K or we can just run it down at $1,490, okay. Here. So I have two levels and I have to work with it. And that's literally what I do. Okay. I have those here. And what it says is that most of the time, what we're going to do, it's going to weak and touch this level and go as high as possible there. That's it. That is a strategy. I always use the most current VPOC. Okay, the most current point of control will always touch the most recent point of control. Now you may ask yourself, but wait a minute, futures market is open pretty much 24/7. Okay, it's only close 2 hours per day. But I only trade during hours, and that's the beauty of things. This here will always touch during hours. If it touches before hours and after hours, it's totally fine. But what I'm saying, the strategy here is that the current price here will always go touch the previous VPOC. Now this strategy works only if one of those port of control, one of those previous port of control hasn't been touched yet. It hasn't. Now when we think about it, why is that? Well, Friday we're lower than Thursday, obviously, okay. Now in terms of sentiment market or supply and demand, the market may ask itself, hey, if I go higher at Thursday VPOC, will the market reject or hold the price? So we're trying to test the demand or supply at that level. Okay, will the market hold this price? If not, then Well, we're going to reject. If yes, then we're going to the previous resistance, which is here, okay? Now, why is it interesting? It's because before this happens, I already know, I have a bias. I'm leaning bullish on a short moment, on a short time frame, okay? Because here we have a lower high, we may weak it, okay? Now, if we reject it, fake out. If we break out, nice, we're going for a full breakout. Now, this is a strategy with point of control. Okay, now let's look at previous data. When I look at previous data, and I want to show this one, for example, this one was pretty beautiful. 28th of March. I have a point of control at that level here, right there. Okay, I'm gonna put a rectangle so you can actually see. 28th of March, I had a point of control. Now the 29th, the next day on the 29th, it went up, we gapped up, okay, and went up again. This VPOC wasn't touched during hours, okay. Now that's what I'm saying. Most of the time, it's going to do that. Now this here was an exception, and that's why you need to look at higher time frames, see the sentiment of the market, and see what's going on. However, my point is, I have a VPOC here that hasn't been touched. And the whole week it's been up, and see what happened. This VPOC was touched during hours on Friday at 9:30. I'm pretty sure 9:30. Let's put it there, 15 minutes. Yes, right at open, this VPOC was touched. Now we have 9:30. Okay, 9:30. Sold off and went straight down to that point of control that wasn't touched yet. And that's why this strategy is very, very simple, very powerful, but you gotta be careful. It's not 100% sure of the time, okay? It's not perfect strategy. However, it is showing you some gaps to be filled. Why is this important? Because the market is always and constantly looking for a fair price to trade at. So as a result of that, the market will always test levels to see how everybody is agreeing with the current price. Which means Thursday's VPOC hasn't been touched during hours, okay? We filled the gap from Monday, and now there is a high chance, a high possibility that next week on Monday we can touch the 5 to 15K levels. Okay, that's what I'm saying. Now, because I know that and I'm thinking of that, I can trade accordingly, meaning I can prepare myself for a potential breakout to these levels. What does it mean is that once I put my levels like this one here, as soon as it goes above that, I'm going to take a long, but okay, I'm going to take calls. Not holding it for too long, but I'm going to take scalps, okay? Now, on Monday, what does it mean is that, again, I'm repeating myself, but I just want to make sure and emphasize the fact that it's not a 100% sure strategy here, that we can go test this level, this VPOC here, this point of control, and we'll see how the market agrees at this price level. And if it does not, then we'll go lower. If it does, then we'll go higher. Simple as that. Okay, now this is gold. Okay, try to use it on your own and let me know if I haven't been clear. Drop a like, a comment, or questions down below. Thank you guys.